Hi, I'm Steve Chater, and I'm with TCT Property Management Services. And I appreciate you coming to watch our video today, because what we're going to be talking about today is wealth building basics. And this is the very first in a series of wealth building videos for our investors and for potential investors. And so we're going to be talking about the basics of building wealth with real estate, because that's our goal, is to help our clients build financial independence with real estate. So I'm a real estate broker. I've been in the business now for 43 years. I'm an investor. I'm a co-author in a book called Hold, along with my business partner, Janice Doty. It was a national bestseller a few years ago. In addition, I was a contributor to two other books, The Millionaire Real Estate Agent and The Millionaire Real Estate Investor. And I want to talk about the foundations or the fundamentals that we presented in these books. Let's start with the definition of financial wealth, and we've defined it in the Millionaire Real Estate Investor book as the unearned income to finance your life's mission without having to work. So when we talk about life's mission, we're not talking about financing your expenses. We're talking about financing your dreams for your life. Is it easy? No. Is it complicated? No, it's not complicated. Not if you follow proven models that make it happen and find trusted experts and partners to assist you and to add eyes on what you're doing and to avoid the mistakes. In other words, nobody truly succeeds alone. So you want to have other people on the journey along with you. So the first thing I want to talk about is the power of leverage. And I'm looking here at the money matrix. Our goal is to have the money working for you. And financial wealth, again, is it's built on capital and cash. And so what happens with most people is, if you look below the red line there, they get some capital, they get some cash to come in, and then what they do is they consume what they're going to consume, and then they get some cash left over, and then maybe some cash flow and some capital. We see people like that. They're driving big fancy cars with big fancy payments on them. They live in big houses with big fancy payments on them. And in Texas, they called that big hat and no cattle. But on the other side of the coin, the people are building capital, and then the capital creates the cash flow, which creates the cash, and then the consumption happens after that cash is created. Okay? So when we talk about building financial wealth, your financial security, we talk in this book about thinking big, right? And so let me just read this to you. People who set out to test the slopes of Mount Everest don't do so on a whim. It's a big goal. It requires big thinking. They study, they plan, they think strategically. Months, even years of preparation are involved, because there's a lot at stake. There's just as much at stake in your financial life. That's a direct quote from Gary Keller in the Millionaire Real Estate Investor book. And so we want to encourage you. This is the basics, the foundation, and it starts with, how are you thinking? Are you thinking big, or are you thinking small? Are you thinking scarce, or are you thinking abundance? So then the next thing we talk about is, okay, follow proven models. What's the model? It's the net worth model. See, the path of money, where is the money going, and where does it flow in your life? Is it coming in and just paying off liabilities and debts, or is the money creating capital and assets for you? It's about budgeting in the expenses and increasing the savings, because the savings, when we talk about savings, we're talking about saving cash. Right? Saving cash. Well, cash isn't an asset. Cash is just a tool to buy assets. And then what you do is you track your net worth, and you track it on a balance sheet. In a later video that you're going to see, we're going to talk exactly how to track the net worth, and we're also going to give you a copy of the spreadsheet that we use in order to track our net worth. And this is the spreadsheet here. And it tracks the assets, and you can see underneath the green and all of the yellow, a place for your paper assets and your real estate and your business assets, and then other things like gold or collectibles or jewelry, things like that. And then on the right-hand side, the liabilities, those are the things that you owe. And so it allows you to track the things that you own, the things that you owe, and when you subtract the things that you owe from the things that you own, you wind up with your net down at the bottom. And in this hypothetical advantage, we got a little bit over $1 million worth of net worth. You know, my kids just tried this the other day, and they said, well, let's put our assets in there. And they were surprised to learn how much their net worth was. Although I've had other people do it, and they were surprised to learn that their net worth was a negative number. And then finally, what we do is we're saying, well, we want our assets to provide the cash to fund our life's mission, so we keep track of our passive income. How much is being created each month that we don't have to work for? And then finally, what's the return on investment? And am I doing well with this particular investment, or should I do something different? See, the financial model that you follow is the model of the Millionaire Investor, and there's two primary ways to build wealth with real estate, right? Number one is equity buildup. What does that mean? That's the difference between what you owe and the value of the property. And so every time that you pay off a little bit of principal, it's coming down and your equity is building up. The other way is cash flow growth. The difference between the rent that you bring in and the payments that you send out, right? So in that model, when we're looking at that model, that financial model, paying attention and making sure that you're following the same model that other people do who have built wealth. You don't want to follow the model of the people that use the lottery system in order to try and gain wealth. Then finally, or I don't know about finally, but acquisition model. And there's two different purposes for a real estate deal. Why would I buy real estate? Well, one of them is creating cash in chunks. And we call that flipping. I buy a house, I fix it up, I sell it for more than I have in it, and I make some money. And so that's creating cash in chunks. The other one is cash flow and equity, which is holding the investment and saying, I have a piece of real estate as an investment. It's going up in value. My equity is building in value. And so you can see that cash in chunks comes from referring or assigning or quickly reselling properties. You know, in the Phoenix area right now, what's happening is there are lots and lots of people that we call wholesalers, and they're going out and finding somebody who wants to sell quickly. And so then what they do is they assign their contract to somebody else and they make a quick profit. I have a contract on a house. If you want to buy not the house, but you want to buy my contract, you can close on the house. They make a quick profit. Cash flow and by the way, you can spend that profit pretty quickly. Cash flow and equity comes from lease optioning or buying to hold rental properties. That's where the investor is building the net worth in the acquisition model. Wall Street Journal just recently in 2019 said homeowners are worth 46 times more than renters. So if that's a good thing to do to own a home, to be worth 46 times more, shouldn't you want more than one? How about 2 or 3 or 4 or a lot more? Okay, so let's go into some of the myths, some of the things that we tell ourselves that we think are true, or our friends tell us, and they think it's true, but it's not. A myth is something you think is true and it's not. So number one, I don't need to be an investor. My job will take care of my financial wealth. The truth is, yes, you do need to be an investor. Your job is not your financial wealth. Number two myth, I don't need or want to be financially wealthy. I am happy with what I have. Well, the truth is you need to open your eyes. You do need and want to be financially wealthy. I'm just going to tell you my story. My mother and father-in-law did not have much. They had to move a couple of times, change jobs, had to dip into their retirement savings, and she would not be able to live on the Social Security that she's now receiving with her husband having passed away if it wasn't for us being able to help support her. You don't know how much you're going to need in the future. So to say I don't need it now is thinking, well, I'll just leave it at that. It doesn't matter if you want it or need it. I just can't do it. You can't predict what you can do or can't do until you try. Okay? So let's go into myths of real estate investing. Number one, investing is complicated. That's the myth. The truth is, investing is only as complicated as you make it. In other words, we said, is it easy? No. But we said, is it complicated? No, it's not complicated. So number two myth is the best investments require knowledge that most people don't have. What's the truth? The truth is, your best investments will always be in areas where you can or already understand. That's why we've started this video series and saying, here's the basics. Now we'll help you understand more and more about being successful in investing in real estate. Risk number 3, and this is what people say all the time, it's risky. I'll lose money. Investing by definition is not risky. Speculating is risky. Investing is not risky. And my co-author, Jimmy McKissick, always says, I've never lost money on a property I didn't sell. Successful investors are able to time the market, and that's why they're successful. No, in successful investing, the timing finds you. And right now could not be a better time with the rent rates and the interest rates that are out there, the positive cash flow. This is a great time to be investing in real estate. And then myth number 5, well, all the good ones are taken. And the real estate agents are all going to buy it, or somebody else is going to pick it up. Every market, whether a good market or a slow market or a fast market, every market has its share of good investments. They are out there in every single investment. So the power of leverage is another thing that we teach in the book, and it's financial model part 1, the equity buildup. And I'm going to go through this quickly so that you can go back and watch this again. But what is that? It's price appreciation plus the debt pay down. So in other words, the tenant's paying down my debt on it equals my equity buildup. And so I start out with a property and I buy it at market value. And you can see the blue at the top. That's my down payment. That's my equity. And so now if I bought it under market value, then the green is the value between what I paid for it and what it's worth today. And then the rest is the debt that I have. And as I hold on to it, what winds up happening is my equity grows. The green part stays the same because that's just the difference between what I paid for it and what the value was at the time, but the debt is going down. And so the market value continues to go up and continues to go up until the debt is paid off and it's all your equity. So what we say is buy it right, pay it down, and pay it off. Model number 2, we talked about cash flow and the cash flow growth. Here's what happens. As time goes along and inflation increases the amount of rents that people have to pay, you add that to the debt payoff, and that equals the cash flow growth. So here's the property and the rent that I'm getting minus my vacancy and expenses, minus the mortgage payment that I have, equals the green. Now that's my cash flow. That's the money I get to put in my pocket. And we tell you do a positive cash flow. Well, as the rents continue, you're still going to have expenses. You're still going to have the debt service, but your cash flow is growing. It's the green part that's growing here and growing and growing. And so, and once the debt is all paid off, all the cash is yours. The goal here is to create enough passive income to cover your life's mission, the things that you want for your life. So I want to thank you for watching our first video for TCT, talking about the basics. And I know I went through it quickly, so please feel free to watch it again and again. If you have property right now and you want to have an equity report and what's going on with your investment property, just get in touch with us. Let us know. You can reach us at 632, or you can see the number down here. I won't read it to you. Number 2, you want a copy of that net worth spreadsheet that I just showed you on how I keep track of my finances and my net worth? All you have to do is email request, just put spreadsheet at tctproperties.com. It's going to automatically send you a copy of that spreadsheet. And then what about the ROI? Do you want to know if you're maximizing your return on investment with your current investments? We have a special program where we will analyze it for you, your income, your expenses, what you paid for it, how much equity you have in it. Can I do better? Or should I stick with what I've got? Or maybe I should take some of my equity out and buy something else, and now I've got 2 of them going. Remember, homeowners were 46 times greater net worth than renters. Shouldn't you own more than one? So, I want to thank you for watching our video. We are the resource for people building wealth with real estate. We appreciate you. We appreciate your business. We are here to help you build financial independence. And feel free to watch all of the rest of our videos as we move forward. Thank you.